MACD indicator. In this video you will learn what the MACD indicator is, how to read the indicator, the three components that make up the MACD, how to trade using the MACD, how to change the MACD settings and what the implications are. The Moving Average Convergence Divergence indicator, or MACD as it is known, is mostly used as a trending indicator. It helps traders determine the market direction, the strength of move, and when that direction may change. Although it lags behind price, it gives the trader the possibility of entering a trend early on and can at times help a trader exit the market before the trend reverses. The MACD indicator is made up of three separate elements. These appear together and are normally found underneath the price chart on most trading software. They are the MACD line, the signal line, and the histogram. Let us now look at each of these three signals in a bit more detail. We will start with the MACD line, which is a moving average type line that tracks the actual price of an asset. The second line is a moving average of the actual MACD line. This line is designed to smooth the movement of the MACD line. It also helps with producing trading signals. The final part of the MACD indicator is the histogram. This represents the difference between the MACD line and the signal line and appears as bars either below or above the zero line. These bars give traders a good idea how much momentum a price move has, helping them recognize when a trend is potentially gaining or losing strength. It is important to note that when applying the MACD indicator to MetaTrader 4, it will appear differently on your chart. This is because only the signal line and histogram appear. The actual MACD line is not shown. The MACD is used by many traders around the world to help identify the current and potential future market direction of whatever market they trade. When trading with the MACD indicator, you could take an aggressive sell signal when the MACD crosses down below the signal line. However, the sell signal is considered stronger if the histogram bars cross below the zero line as well. Conversely, you could take an aggressive buy signal when the MACD crosses up above the signal line. However, the buy signal would be stronger if the histogram bars cross above the zero line as well. The MACD indicator's standard settings are 12, 26, and 9. As with most indicators, you can adjust the settings to change how quickly or slowly it reacts to the movement of price, resulting in the number of trade signals being generated. If you increase the settings of the indicator, it will generate a lot fewer signals, which would prevent many false signals. The downside of doing this is that you can miss out on the start of some big market moves. On the flip side, if you decrease the indicator's settings, it will have the opposite effect, making it more sensitive and generating more signals. The downside of doing this is that you can have many losing trades because of the false signals the indicator would give. If you do decide to change the indicator settings, make sure the changes made are improving your trading results. By logging and comparing winning and losing trades under different indicator settings, you can decide what works best for you. So far you have learned that the MACD is a trending indicator. It can help you decide when to buy or sell an asset, enabling you to enter trades as they start and exit them before they finish. The MACD line is a moving average line that tracks the underlying asset's price. The signal line is a moving average of the MACD line and interacts with it to produce trading signals. The histogram displays the difference between the MACD and signal lines and indicates the momentum of a price move and when it may be about to end. Buy and sell signals are given when the MACD line moves above and below the signal respectively. The histogram revolves around the zero line. Bars below the signal line indicate downward momentum, and above the zero line indicates upwards momentum. Increasing the indicator settings slows down its reaction so that it produces fewer signals. This reduces the risk of false signals. Decreasing the indicator setting speeds up its reaction so that it produces more signals, but raises the risk of false signals.